Nothing is permanent, no matter what situations or what you are or what you live in. Nothing happens with no reason. And if you have the knowledge and you know how to react to it, you'll not be dictated by anybody of what to do and how to react. You own your life. You own your outcomes. It might be difficult to go through them, but we can do it. Well, hello, hello. We're here again, Sandra. What a pleasure to have you. And I know you are a super busy person, and I am pretty sure that Tom Ferry and Tom Ferry International is just doing nothing but great things out there. And you're super busy, so I'm more than blessed that we have the opportunity in a weekly basis to get together. How are you?
I am doing great, Miguel. Thank you. And thank you because I know that you're equally busy and you're always out there bringing great information to the market. Because I know that in this moment, what we value the most over everything is great, reliable information, right?
Right, it's crazy. I mean, there's a lot of people talking out there, and there's a lot of no nonsense out there too, and everybody wants to become an expert. And I'm not by no means pretending to be an expert. I just have experience, and I've been in the industry for more than 25 years. And I hear a lot of noise, a lot of rumble in the market. What are you seeing out there?
Seeing a very mixed signals market. um, s- it's still incredible how the market is moving in waves and how we still have markets, very few of course, that are seller markets. The majority are buyer markets. We're working a lot on pricing, and we still have the rumble of interest rates and mortgages and all of these options for mortgages that have been released, and opportunities for investors with a one big beautiful bill, with the portable loans, with a 50-year mortgage that we're hearing more and more about it. And I would love to ask you, Miguel, why this topic of the 50-year mortgage matters.
Well, when we look back and we understand the markets, we see that when governments are facing challenging times like the one that we're living in today, affordability and interest rates are not behaving or not responding to the political pressure and the government mandate, we have to look for alternatives, right? So President Trump, a few weeks back, we're recording this in November 27, I believe it's today, of 2025, President Trump, a few weeks back, decided or made a comment that he's thinking to, help us to promote a 50-year mortgage. And the whole industry went ballistic, and bankers decided to speak up and say, We don't think that's the solution." And the reason of that is because the 50-year mortgage indeed creates a lower payment, but prolongs the repayment of the debt, which translate in an impact on wealth creation and equity, and equally an impact in a negative way with equity. Right. So this 50-year mortgage, happen or not, is a good topic to talk today about, Sandra. Why is that? Because no matter what the opportunities or the offerings that we have out there, is it a 10-year, a 15-year, a 20-year mortgage, a 30, a 40, or now a 50, right? What the consumers and real estate agent professional need to be um, or need to show up in the marketplace. No, they don't need to be anything. They just need to show up in the marketplace and experts and know how to interact and how to make the most out of these offerings, right? So when we look into this, we have key drawbacks. And let's
Exactly.
start with that. So what are the key drawbacks on a 50-year mortgage? Number one, well, equity bills extremely slow. The interest rate is longer. Therefore, you are prolonging the debt. You're paying more in total interest paid out of the debt versus a 30-year mortgage is greater, right? And the difference in payment is not significant. Yet, what is the opportunity? Well, you can qualify. That little difference in payment can help get you into a house. Number one. Number two, that can create an opportunity for have a multi-generational occupancy or additional units or additional ADUs as we know them in the industry that
Exactly.
can be built, right, to really make the affordability challenge more bearable from some of the people, right? And it's a very good tool for those that are very strong and financially savvy to really come to market and being able to apply a payoff acceleration in the marketplace by making additional principal payments. And what I'm trying to say here, Sandra, is nothing different than this. And it's a message to our realtors watching this conversation
Exactly.
today. 50, 40, or 30 year is just a tool. It's all what it is, right? And it's a tool for us to use if we need it. That doesn't mean that you have to use it. It's just out there. But it sends a good message to the market. And what is that message? And I would love to hear your opinion about it, is that it's possible to become a homeowner when today feels impossible. So it's not good or bad, it's just a tool. It could be bad if it's not a good tool for you, but what do you think the real estate community will react or will do to this type of a tools?
Well, this week I heard a podcast from Tom where he's saying that he's like amazed, not in a not in a very special way, that we are hearing now that first time home buyers are not in their 20s or in their 30s, they're in their 40s. And this comes from an affordability issue. What we were talking about the other day when we touched on this subject was, yes, definitely this is a tool. And I think that for the understanding is that when we engage in such a long term or in any loan, the very first payments or the very first years of the payments are only interest. So it would turn out to be that if you sell this home in the very short term without paying forward payments, like instead of 12 payments, maybe 14 payments a year, to reduce the interest ratio, when we sell, we will end up having nothing at the end of the sale, right? Because all of the money that we would have put forward, it's interest and there is no equity. So I fully believe what you're saying, that these type of instruments are tools. And that if we get the right financial advisory, we can create one of these tools to be equity builders if we know how to use them, and have extra yearly payments so that we can really capitalize on equity. Or maybe you want to have this home as a passive income, or as a home that pays for itself in time, right? And like you very well said, you may rent it out, you have an ADU, it can be a multi-generational home, or it's that home that you will never sell. And you will keep it
100%.
for passive income when you retire. It's kind of a retirement fund, right?
And you nailed it. What is the core message here? Not everything exists. Not everything that exists, I will say, should be used blindly, right?
Exactly.
But everything that we have should be understood. It's
Exactly.
understanding. That's what we're trying to say here to those that are listening to both of us talking today. Because the concept of a 50-year mortgage or a buy down in a rate is not different than the concept of a 30 versus a 20 or a 15, right? It's exactly the same thing, and it's based on the individual needs and financial situation of that family, right? So if we learn how to offset for the interest rates, and we understand that a 50-year mortgage has a higher interest rate, deferred payment over time that makes it more affordable. Let's call it affordable. It's more expensive. It's reality. It's real, right? But it gets you into the house. Is what are you gonna do in the years to come? What skill you improving to earn more money and to be able to refinance it? How much more are you paying down to the how to these debts to become an owner faster, right? And I think we say this in one of our conversations before, right? Real estate agents and loan officers out there need to stop looking into how to qualify people for a loan, and instead they need to focus on how to make people home owners, right? And give that home ownership, because we talk about the dream of home ownership and then we go and seek for a loan, to qualify for a loan to get a debt, not a home ownership, right? So to me, the play of equity is built in two ways: appreciation, because timing in the market, and secondly is just by simply paying off, right? So that's that equity that we talk about, right? So when we make these payments and we are facing higher interest rates, which what the market is showing today and is not really losing up, and there's reasons why not. Um, what we need to do is to look for discretionary income to pay less. So let me give you an example.
Yes.
If you, let's just pretend you're a home buyer, and you come to me and say, hey, I want a loan, and I'm just a predatory lender, and I give you a loan on 100% interest, and you pay it in 2 days. Your cost is less than somebody that takes it for a 3% or 2% in 30 years, no
Yes.
matter what,
Exactly.
period. Right?
Period.
So time is how fast can you pay it, right? So the note is just the commitment. That's what I want to educate the people today. You're committed to a lower payment, but that doesn't mean that's the only payment that you can make. You can make extra additional payments. Now, if we go purely about going over, is it a better a 30-year fix over a 50 and the rates that we have on hand? Absolutely, the 30-year mortgage makes more sense than the 50-year mortgage, just because it's a 20 years gap in between. But when we really look into, do I qualify today? What is my cash flow is going to look like? Let's say I'm an investor. As an investor, I can make money in two ways: through capital gains, meaning
Yes.
my asset gains value over time, or
Yes.
cash flow. If you hit the jackpot and you get both, amazing. It's a good market to be in. But not every market is like that at all times. And our market right now is not showing that option or that opportunity for those that are becoming investors or they are investors. But doesn't mean it's a bad investment. It's how you play in the market. So if your rents really cover the mortgage and there's a third party paying and the equity is being built slowly, but you put a little bit more effort and make the extra payments, and you make that extra payment to cut 10 years by making one extra year payment a year, or you do one and a half to pay that in 35 and 38 years, then you're getting ahead with your own efforts against the market, right? And if the rates change and they come down, hey, you know, just take it and just do it when you have that opportunity.
I agree with you. So we have to understand what's the motivation. And we need to understand, maybe a person wants to buy a home today, but they really don't qualify. And the only instrument or tool that they can use is a 50-year mortgage. However, if they have this financial advisory from a loan officer or a real estate agent that's not a predator or that's not thinking, oh, I'm just going to sell the house, you can come up with a financial play or strategy that would benefit that owner or that person that wants to buy a home in the beginning or even in the medium term, right? Because I don't think this is a loan that should be held throughout its life because of the high interest rate, and that definitely you would end up paying 130, 150% more than what you would have if you would have a 20-year or a 30-year mortgage, right? So, as you very well said, this is a tool. And we should all, as participants in the industry, understand how financially these tools work in the long run and in the short term. However, I do see it as a wealth building. If we can't qualify now and we're young, which is not my case, and we're young, but you can keep it for 20 years, right? Making forward payments and then selling it, and at that point you would have acquired some capital gain through time, right? Or
Sandra,
like you very well
let's,
said,
yeah,
refi. Huh?
yeah, no, I'm gonna say let's look at the trade-off. Let's say if we don't do nothing. So you continue paying rent, you continue, I mean, I'm just talking about those that are undecisive. They continue paying rent, they continue living in somebody else's property, then most likely they're paying somebody else's mortgage. They have no equity. It's not that equity is built slowly, it's built in a different pace. It's no equity of what you're spending. And even when that rental payment is exactly the same or higher than buying, that's a nonsense. I don't care what other people in the market say that buying a house is not an asset and it should not be looked as an asset and it's just where you go to sleep. It's an expense, and if it's an expense that I can get a penny out of it versus nothing, I'm coming ahead, right? So, and that's where the ignorance is very dangerous, right? Being ignorant, and people take advantage of, a lot of the people that I see talking in the market that buying a property is not a good thing. They own properties and they rent them, right? So, what is it that is it such a bad thing? They advise you to buy and rent, but they don't advise you to buy and leave. So, meaning you can be two people in the same movie, right? So you can be the owner and you can be the tenant.
Exactly.
That's to me is important, right? And we need to make sure that people are educated, and because when it's in the presence of fear is when the decisions that we make are very, very difficult to sustain because they're not logical. They're just driven by the emotional factors, right? And
Exactly.
those real estate agents and loan officers out there and professionals in our industry who understand how amortization and payoff and acceleration of the payoff works can really help clients to build wealth and not just to qualify for payments, right? And that's what it to me, this conversation of today is holding so much value, and I'm pretty sure it's going to be relevant 30 years from today
Of
because it's
course.
going to be a different rate, different problem, but at the end of the day, it is the home ownership, or owning an asset that is the second largest asset in the world that builds wealth, is owning a property, right?
Exactly. And like you very well said, if you keep it for the term, when you're 70, if you got it at 20, you have a place to live in,
Exactly.
right?
And that's the worst case scenario. But in the United States, the average ownership is 9 years at the
Nine.
moment. It used to be five, move up to nine because of the conditions that we're living in. Pandemic played a big role into it, and we have some issues right now, especially with the millennials. Right, they having a really tough time to becoming, financially stable because of the cost of living is so outrageous, and they're starting from zero, right? So it's different than someone like you and I that we already have, some years under us. We have created some financial stability that help us to really continue moving, right? But when I look at my kids, for example, I say, man, it's going to be very tough for them to get to the standard of living that I used to have, or accustomed to have, if we don't help them, right? So being in facing, I'm not saying that the policy is good or bad. What I'm saying is, if it happens or not is another way to approach a problem that we have on hand: affordability, high interest rates, unemployment, the lack of effectiveness of the Federal Reserve, the reporting that we have currently for the job reports that is not accurate. And it's not because it's just old and we don't know, we haven't really put an effort to have a better reporting system, have better data out there. But at the end of the day, every single day somebody needs to buy and sell and live somewhere, someone, right? Somebody's being born, somebody's dying, somebody is getting married, somebody is having kids, and this is a very, very a topic that you and I we have a passion on it, because beyond the money that can be made and the industry is we really get involved in one of the most beautiful pieces of the human being, which is where they live, where they shelter, when they hide, when they have memories, right? Or where they make some wealth. So I guess I thank you for the opportunity to speak in something that is near dear to my heart, and I consider myself educated enough to be able to speak in the terms that we're doing today, to simplify and tell the audience one thing: if you're a real estate agent, it's your obligation to educate your clients and to help them to achieve what they really want. It's not just to find the perfect house; it's to become a homeowner of that house.
Exactly.
If you're a lender, how you have a dual obligation. We have an obligation within the lender to make sure that we give money to those that can pay it back. But most importantly, is we're helping those two to become homeowners, right? And that's important. So just to understand that. And I was so curious before this call to talk to you about it, because I know you coach a lot of people with Tom Ferry organization, and the majority of them are real estate professionals that are very successful. And
Exactly.
when these announcements come out, I was very curious of, is it a panic in the market? Is it a good um, reaction? What does the reaction look like? Is it good? Is it bad?
There's
Is it a
really
good
not
time to talk about this?
exactly, but I really haven't seen it. It was a big reaction when it came out, but there's so much happening in the market and so many news and so many complicated uh, like lawsuit and class action suits and reactions to the market that I don't think that the market is paying that much attention in the long term or for a long period of time to one piece of news, right? It's one after the other, after the other, after the other. However, it's still a tool that we need to have top of mind as professionals. Because, as you very well said it, in any market, regardless of the situation, the real estate market is close to the cycle of lives of people. And Tom calls it the D's. It's like 7 D's or 6 D's, which you already mentioned some, which is when you move out of your parents' home, you get out of college, diploma. When you are going to get married, a diamond. When you're going to have a baby, a diaper. If you get divorced, or then he called it the relocation or the investment, right? Then it's the decluttering, and then that's the death, right?
Right.
So in any market, we will have this. So that's why we, as participants in the industry that are helping people in the home ownership, need to know about these tools.
I agree. I agree. But it's also important to understand that it's an emotional decision, right? Because it's always going to be attached to what you and I will really have a big passion on is the emotional piece and the knowledge around this. So what I hope we accomplish today is to give some sort of certainty and some clarity to our audience and whomever is listening to this to understand that number one, and we were saying in this before we start recording, nothing is permanent, no matter what situations or what you are or what you live in. Nothing happens with no reason, and what you if you have the knowledge and you know how to react to it, you'll not be dictated by anybody of what to do and how to react. You own your life, you own your outcomes. It might be difficult to go through them, but we can do it. So this to me, Sandra, is one of the best calls that we had so far. I thank you for it. I am pretty sure the audience is curious of how to find you and maybe how to find me besides what we're doing in these social media platforms. So why we don't share real quickly how they can get a hold of Sandra, and I will share how they can get a hold of me.
For me, it's super easy. Instagram, a DM, Sandra underscore Hendricks, like Jimi Hendrix, like you see in my name, underscore Sandra underscore Hendricks underscore. DM me or write in the comment and we will get back to you.
And with me is d.mv real, and that's my handle on Instagram. So Sandra, again, a pleasure to be with you again, and I'll see you next week.
And I see you next week. Thank you, Miguel. Bye.
Bye.